Happy Sunday, guys. The markets have been crazy recently, and I wanted to jump on here and take a look at some charts with you and talk about some of the best trading setups that I am looking at going into the week ahead. Let's start with the dollar. So the dollar is something that if you guys have been watching the channel for a while, you know I'm pretty bullish on the dollar for the time being. With everything going on right now with Russia, Ukraine, inflation fears, things like that, the dollar looks pretty attractive in my view on any pullbacks that we get. Now, let's go ahead and take a look from a technical perspective at where we currently sit. On the daily chart, we are kind of oscillating between the highs and this consolidation period zone that we've seen recently. If I'm looking at the dollar and I'm looking for trade setups going into this week, one notable thing that we did see is we did actually hit a short-term target on the dollar, which was retesting this previous high. Ever since we came up to that level, we saw an immediate pressure back down the other direction, and we saw some pullback. This, in my view, is still a buy. Even though this may kind of look like a double top, I would still view this as more of a buying opportunity on a retracement than anything else. So looking at the dollar, you might say, well, yeah, looks kind of like a double top. We had a lot of rejection there. Should we probably be selling? Well, my view would be no, because of the fundamentals. And in my view, what this would mean is that this is potentially giving us another chance to look for pullback plays in the midst of this. Now, we are, of course, looking at the daily chart. So this is higher time frame stuff. We'll take a lower time frame look at some of the individual currency pairs and where we could potentially look for some setups. So again, pulling back here, if we do get some more discount on the dollar, I will be treating that as a potential pullback and place to look for entries on the long side. Let's look at some individual currency pairs, starting with Euro USD here. So the euro dollar has been a pretty good currency pair to me recently. I had a nice little trade there last week. Some of you guys may have seen that when I talked about that. But anyways, the euro dollar selling off recently was, I basically took a trade. I'm not logged into my broker, unfortunately, here for this, but I shorted around here, waited through this consolidation, and then ultimately was able to trail my stop following this price action and close out right around here. And what I said after this big pin bar is, okay, that looks pretty bullish. I'm going to go ahead and hop out there for the time being. Did that, and now price is starting to retrace. Question is it time to get back in on the short? And I will share that my personal opinion is I would like to potentially re-enter my short should we come up to levels like this. Now, this is a little bit higher time frame, and depending on how you draw this, you know, that looks like it's a very deep retracement. But if you draw it along here or the whole story, right, you've got the 50% retracement, which kind of makes a lot of sense from where price would want to naturally retrace. When you get these big moves, it's very healthy for like a 50% retracement before continuation. So big move back here from, what is that, the 9th of February? So, yep, the 10th, 9th of February, we saw this spike up and then have been selling into that since then. And now the potential pullback area that I am interested in is that 50% retracement off of the lows that we made during this recent setup. Now, why would I want to, or what would I want to do with this? Would I want to buy? Would I want to sell? Well, my idea would be I'm looking to short this retracement with the idea of continuation in mind. Given that we do have a situation in Ukraine and Russia, that's a negative catalyst. We also have a strong dollar in my view. So a pullback on the euro dollar looks like a short to me, given that, again, the Fed looks to raise rates. They're looking hawkish overall, and we have an inflation concern in the U.S., which could cause the Fed to get aggressive on that situation. So putting it all into effect, fundamentally and technically, I like a retracement here on the Euro USD. If I do take this trade, of course, I will share it within our private Discord channel. If you guys are not already in the private Discord channel, I share all of my trades here. So whenever I take a position, I share the full breakdown here. You know, last week I mentioned that we were short on Euro USD. It was a crazy, crazy week watching that sell go into effect. But yeah, so we talked about this on the channel several times, but I ended up shorting here, basically bearish on the Russia-Ukraine situation. There wasn't much more to that. I was just going with the momentum. Price pulled back to a level I liked, went ahead and shorted and wrote it down as things kind of progressed last week. Now, going into this week, I still am bearish on the euro, and until further notice, we'll be looking to potentially pick up some more shorts on a retracement. So if I take any trades, I'll share the full breakdown and analysis with members here. We are doing 20% off right now inside of the group. If you are interested in joining the group, by the way, you get access to all the trade alerts that I share. You can see mine, Patrick's, Annie's, Ivan's. We have several traders inside of our group contributing to the community. We also have resources available, so you can jump into our coaching webinars. You can read up on our educational stuff and go through our research stuff that we put together here at A1 Trading. There is an entire team of people, so you're accessing the knowledge base of a lot of people's work with just getting a membership within the group. But you can also join the chat room and all sorts of other good stuff. So if you're not already inside of the group and you would like to join, now's a chance to do it for 20% off. There's a subscriber discount linked down below in the description. It's right there at the top. You just hit that link and you use that promo code, and you can come join us on all the action that we've been going through recently. Things have been crazy and volatility is very high, which of course is, it's kind of a good thing for trend following. Speaking of trend following, let's take a look at the pound dollar here. And the pound dollar finally getting a decisive trend to the downside last week. And this makes sense, right? The pound very weak on the fact that, okay, the pound is kind of that risk on currency to one degree or another, or that's how it's been treated, especially since the Brexit situation has begun. We have seen the British pound be quite a volatile instrument and a place that people go towards when things are optimistic in the world and against or away from when people are afraid. And so when we saw that big fear spike due to the whole situation recently in Eastern Europe, of course, that caused a massive sell-off there on the pound dollar. So for me, until further notice, until things blow over with this, I'm not necessarily looking to short the pound dollar, but this does look bearish to me. Why would I not want to short it? Well, their central bank is still sort of hawkish comparatively speaking to a lot of other places. So I don't really love to short a hawkish currency in the sense that, okay, they're raising rates, things like that. But if you are looking at this pair from a short-term perspective, there may be opportunities to look for sell trades on a retracement. And you can actually see this pullback has not been as aggressive as the Euro USDs. The Euro dollar has come back a little bit stronger than the pound here recently, which we could probably see in a reflection on Euro GBP. So Euro pound, we're seeing the Euro kind of outpacing the pound at the time of filming this. So yeah, just an interesting little side thought there. Another pair that I've been keeping tabs on is dollar yen. And dollar yen, I actually had an idea. I don't know if you guys may have seen this or may not, but I put out a video talking about a retracement buy that I really wanted at 115, and we did not quite get it, or 115.1 is the level that I mentioned. You can actually see price jumped off this, broke out beautifully, and this is where I was like, okay, I'd love to be on a retracement buy, came right down to my level and just missed me. So this happens sometimes. It's a bit frustrating when it happens, not gonna lie, but it is just part of trading, and so, we move on. So anyways, if price does pull back here, let's actually reset up this idea. We'll draw from the swing low here to the swing high. Where could we see this thing go? Well, you guys, it's possible that we still could get that entry point. We may have to be a bit patient on it. Again, talking about this a week later. If price does retrace, the dollar yen to me is actually a buy on a retracement to the 50% level. So that's one level that I'm looking at personally for buys. If we were to enter into that consolidation zone again, I do like that idea. If you're very aggressive, perhaps there's something at the 38.2 you could look at. But my idea here with any trade setup is, of course, looking for good risk reward scenarios. I'm looking for places where if I'm right, the reward could be excellent, and if I'm wrong, the risk will be relatively small. So on a pullback, maybe I'm looking to set up a trade idea here on the dollar yen, and I'm looking to just stop out very quickly if this thing comes back to my level, and I'm completely wrong about this idea. Let's just say it completely tanks. I'm looking for stuff where I can get a fairly good reward relative to the risk I have to take, right? So that if I'm wrong, it's a very small loss, and if I'm right, we have the potential to make great money comparatively speaking. If I risk $100, I don't want to try and make $100. I want to try and make 200, 300, 500. Just depends on the trade that we get. Now, just to kind of clarify that, like that Euro USD trade alert that I shared last week, I was able to get, I think it was, how many R's was it? So I risked 200 initially, and I ultimately closed out for about $1,000. So in the end there, $1,000 profit, that's 5 times the risk that I had to take. So that was a 5-to-1. Of course, that's like the ideal scenario. Not all my trades are that good, but when it happens and when you catch that runner, it can make up for a lot of little losses that you take along the way, and that's exactly the style of trading that I'm looking to employ in my own approach. Let's take a look now at gold, and I actually wanted to, before we jump into the gold chart here, looking on the 4-hour chart, we're going to do some markups here. Let me just real quick jump over and take a look at the COTs with you guys. So I'm going to head over to a1trading.com, and I'd like to just show you guys what the COT data has in store for us. 2 markets that I'd like to look at. The gold market is where we'll start here, and then I would like to look at the S&P 500 just because it is such a hot topic market right now. Okay, so gold, right? Gold recently has been on fire, and let's look at the most recent COT. what we see is a pretty consistent level of buying from the non-commercials. I don't really care about commercials, as commercials are usually just hedging their positions. You can look up the definition of commercials versus non-commercials when it comes to COT, but non-commercials are usually your banks and institutions that are speculating on future market prices, which is kind of what we're doing here. So again, we are talking about nice accumulation of gold in recent motion. So this is February 21st data. We got more buying on the gold market as far as last Tuesday, which is the most recent data that we have from the COTs. So given that perspective, when we look at gold, this for me is still bullish until further notice. Now, again, we've been long biased on gold. This is another trade that I took inside of the group. Let me just see if I can pull this up for just a moment here. Again, by the way, whenever I take a trade, it's not meant to be like a, oh, here's my trade, now just go copy it. The whole point of my service since day one has literally just been a place for me to journal my trades, and then people wanted access to it. They had a million questions that went with it. So we started bringing on people, literally like people's jobs are to help traders within the group and that sort of thing. So, it's something that we have a price tag on. It's a lot of work on our end. But anyways, the gold market, right? 1849 is where I got long. I was able to risk, again, going off of what we talked about before, risking very small. I risked like 80 pips, which on gold is very little. I risked like 80 pips to catch another runner, and this one also played out very nicely. So we were able to get in there and move that stop loss, trail it nicely, and in the end, we were able to close for 600. Well, we floated up to 650 pips or something like that, 490 pips on this one, which was awesome, right? So, that's the idea with the group. So again, risking 80 to make 400 and something pips is definitely the type of reward to risk that I'm looking for in my personal trading. Now, looking at this gold market move recently, this is very intriguing to me. Now, I don't like the daily chart. The daily chart kind of scared me when I looked at this last week. This candle here, that's a nasty, nasty candle. That's a lot of sell pressure. I mean, it's a lot of buy pressure and sell pressure if you think about it. To get this market to pump all the way up to 1980, 1970, wherever it landed, and then come right back down just as fast is such an alarming amount of money moving in and out of the market in a short period of time. So for me, going into this week, I'm very much cautious. We bought gold 1849 within the group, was able to close out somewhere around here, which was excellent. We made some great returns on that gold move. And now the question is, Nick, do you buy right back in? Well, I think you got to be a little bit patient here, especially with, how much this thing has been moving. It's been moving so hot, so fast. I think that it's very, very okay to just say, maybe this level is as attractive as it is. It looks very good, right? And the COTs look strong. If you're very aggressive, perhaps there's some buys here. Perhaps there's some ideas, some small risk reward that you could be looking at around 1890. But I think the more conservative approach may be to see if we can get a retracement back to my initial level around that 1850 zone for another buy. I am not opposed to the idea, if price were to make a move back down here, to re-enter my thoughts on gold and to try and ride this thing again. Again, what is pushing gold higher? The Russia-Ukraine situation. That is what is forefront most likely going to move the market of gold up or down, right? If things escalate further, we are likely to see gold continue to run. And if we see things subside or things calm down in Russia, Ukraine, which right now does not look very likely, then perhaps gold makes a move lower. So when we put all this into account, again, most likely things look volatile and looks like they're going to continue to be volatile. Gold, in my view, is a buy. We have the COTs, we have the fundamentals, and we have the technicals. That is what I would call a prime situation in which I'm looking to buy gold. Now, please remember, this is not like financial advice. I'm not here telling you, go buy gold at 1890 or 1850 and put all your money on it. Absolutely not here to do that. I am sharing my thoughts. I'm sharing my ideas, just like when I share trades within my Discord. These are trades that I am taking. I am really putting my own personal money on the line when I take these trades. I'm not here to tell you what to do with yours. I'm just sharing my thoughts and opinions. I can be wrong. I am wrong sometimes. And that's just trading for you. So it's about risking small. It's about looking for situations like we discussed, looking for those high reward relative to the low risk scenarios, and stacking everything together. It's still a probability. It's not a certainty, but I think that there is some good upside for gold still. especially with this recent pullback. So very aggressive pullback. We had some strength come in. I mentioned that one more market that I would like to take a look at with you guys is S&P 500. And, S&P 500, massive rally there last week. I mean, this was a very impressive move for the market here. We actually even saw something kind of interesting. We saw a break of this downward structure that we saw. Again, every single rally seemed to have gotten sold for quite some time. And so when we look at this, I would like to see what the COT says. So if I head back over to the COT report and let's go take a look at the S&P 500. Again, you guys can grab this whenever you'd like on the website, a1trading.com. Okay, so this is interesting. COTs show a more buying on the S&P 500. Very intriguing. So despite this market moving down, the S&P has been being bought by COT reports standard tier, looking at the S&P 500. That is very interesting. So putting that into perspective, again, accumulation there. Maybe there is some upside here. Now, this is risky, in my opinion. This is a very high risk exposed position to be long on these US indices. And again, the reason is we have inflation concerns and we have the Ukraine situation. Of course, it doesn't mean the market can't still find a reason to rally. We have seen this thing continuously in the last 10 years be just such a bull train all the time. That will at some point turn around. It will change its nature at some point or another. But for the time being, we see some short-term bullishness. I would be cautious personally. I'm not buying it aggressively myself. But in terms of bullish structure, we do, to be fair, have some breakouts here that we've got to discuss, right? This downward trend broke out here on the 4-hour chart. Pullbacks could be intriguing. And then short-term targets as this thing does try to climb higher. You've got a couple in the short term that may be of interest. You've got this level here, and of course you've got the previous top. So, well, not the previous top, but the previous high on this little double top point at 45.88. So I think that it's very much an intriguing short-term play if you're looking at this. I just would be cautious with the buys, that I'm not just buying it and hoping and praying that it flies back to the very top. It could do it, but I think that you're very much exposed to a lot of downside risk with everything going on. Now, again, if that changes, then we'll change our perspective. But for the time being, the S&P 500, in my view, is a very neutral place. I'm not super bearish. I'm not, going to short it because it has been short, very aggressively sold for a while. But I'm also not incredibly bullish on it either, unless you're talking longer term. Longer term, I like the idea of buying some stocks right now. And that's just been my take on it. I bought Amazon at, just for those of you guys who care, I bought Amazon at $29.50. So $29.50, right around here. But I didn't buy it here. I actually bought it over here. So I've been sitting on it for a little bit. But just a stock that I wanted to pick up. It's been down for a while and decided I would pick it up there and put some in my account. But that's just kind of my take on this. Let's take a look, shift gears for just a moment here. Let's take one more major currency pair that's been on everybody's radar seemingly, is pound yen. Pound yen. Is it time to buy pound yen and catch it low, or is it time to short? And it's going to be, for me, it's going to be very much similar to the pound dollar. I don't really want to short the pound because the pound is high yielding currency right now. Their interest rate raises recently. Their hawkish central bank. If things come out of this situation, if there's any light at the end of the tunnel, I expect the pound to probably rally, like very strong. The yen, kind of the same concept. I'm not super bullish or bearish on the yen. I'm kind of neutral on the yen at the time being. The yen, it is strengthening due to the fact that, or there is some strength on the yen due to the situation, right? People buy the yen in times of fear. So put it into perspective, just from a technical perspective, as price pulls back here, you may get some ideas of selling here if you are very much bearish on the situation. If you think things are going to worsen globally, the pound yen would probably suffer. And that's why we kind of see it moving lower here on the 4-hour chart. Ukraine and Russia situation has been a damper on the pound yen's super strong rally that we had for a couple weeks there, right? So we saw some strength come in on the pound yen, but then now being nullified by this recent global situation that we are in. So if you are bearish on the worldwide view right now, then I would stay away from buying pound yen personally. But if you think that things are going to recover. Watch for breakouts, things like that, but just be cautious, right? A lot of times people are buying super risky things, not really paying attention to the fundamentals, and it's a very uphill battle to be buying risk on assets in the face of a super risk off environment. So right now I am oriented towards more risk off, and to summarize, I am looking more for US dollar strength. I'm looking for gold buys, things like that in the current market environment are more up my alley for things to be looking at closer. So that's my thoughts today. If you enjoyed today's video, make sure to thumbs up, subscribe, and remember, get access to the group for 20% off. There's a link down below in the description. Come trade with us. Things have been really, really awesome. Recently, we've been catching some excellent moves, and things have been really exciting in markets. Now, of course, none of this situation is exciting per se, but just in terms of a volatility basis, things have been pretty interesting for traders. With that said, thank you very much for watching. I hope you have a great rest of your day, and we'll see you next time.